Okay, let's do taxation. Now, there are two types of taxation. One is input tax, output tax, and withholding tax. Let's start with input tax, SPRO, IMG, uh, financial accounting, global settings, ledger, not ledger, financial and global settings, sales and purchase taxes, basic settings. In basic settings, you will see what is a format of building a tax code. Then we'll assign a country and we will check these nodes. Although we just are uh, reserved with these nodes, calculation procedure and assignment, but we will check all of these. Then in calculation, we create tax codes, and other than that, we specify a base amount. And after tax codes are created, tax accounts are assigned to the tax codes. The country and tax code are given to GL accounts. And then in the next, after the end of FI, we will also configure exchange rate difference posting accounts. And after that, we have withholding tax, extended withholding tax. It's an easy topic, not so difficult. Let's start with basic settings, calculation procedure. There are three steps: sequence, condition types, and procedures. Access sequence. Okay. MWST. Text classification. This is a text classification we work with. MWST. Accesses. In this, we have country and tax code and text classification is the jurisdiction. What kind of tax? Why do we want this tax? Fields, country and tax code. Two fields are uh, used in this country and tax code. If we want to make it constant, we can, but we have to use for other jurisdictions as well. Initialize means it cannot be empty. It will have an initial data. Okay. Access sequence, MWST accesses, text classification, fields, country and tax code. Okay. Condition types. What are condition types? MWST, MWBS input tax, BBS input tax, and MWAS output tax. We will deal with input tax right now. Now, input tax will use the access sequence we discussed in the last step, that was tax classification. So what is the condition? This will be taxes. So what other classes do we have or categories? We have discountants. We have discount and surcharge. We can also configure other than tax discounts and surcharges, extra pay, wage withholding tax, prices, expense reimbursement. This is for HR. Rest, of course, these are different categories for ISOL landscape. Calculation type will be percentage of fixed or an amount. So we have fixed amount, percentage, quantity, gross weight. There are many metrics that we can see. Condition category. Condition category. What will it be? It will be tax or delivery cost or packaging, cash discount, freight. These are different ways you can use what condition types. It's not necessary that condition types are only for taxes, but these can be used for many other processes. Okay. So if you are asked in an interview, yes, you can use condition types using access sequence, which can be different for costing, for free goods, freights, payments, profit center costs, and so on. Okay. And then changes which can be made. Changes in amount and percent. Yes, we can change the percentage. Quantity relation, if it is related to quantity of a material, yes, it will be uh, checked. Manual entries, can we do manual? Yes, we can do manual entries. And intercompany billing, it can be used for that as well. Okay. So keeping this all default, item condition, let's see what this is. Of this, I am allowed to enter in document items. Condition is then only valid for the particular item which is entered. Okay, that was input tax. Things are all good. Procedures. What are procedures? We have tax codes or tax jurisdiction for every country. Every country will have their own set of taxes. Okay. We have made one for Pakistan, PK tax, control data. And over here, we explain the procedure, the calculation. Base amount is the base amount of the invoice after discount. And on this base amount, which is line 100, output tax and input tax will be calculated. So it is instructed from line or from step 100, it will calculate output tax, input tax using account key. This MWS and VST will be used to attach accounts. Okay, I'll explain again. Control data. Base amount, input tax, it will calculate from 100. Next is non-deductible input tax. This is for materials. Acquisition tax credit, acquisition tax. Acquisition tax is used for assets and you pay taxes on that. That is acquisition. Input tax will be calculated based on 100 using the key VST. Okay. Assign country to calculation procedure. Acquisition, PK. PK tax is configured over here, which will have that structure where base amount will be used to calculate input tax. Check and change settings for tax processing. VST, input tax, double click. This will be input tax. And what is the type? Type will be input tax or additional tax or output tax. Posting indicator. Posting indicator means the system will generate no posting or separate line item, or it will distribute to relevant expense and revenue items. It will add to expense or it will create a separate line item. So we create a separate line item. Not discount related means the tax portion which is assigned to corresponding transaction is not taken into in determining cash discount base. The option is only for Canadian sales tax zone if the tax base and cash discount base are calculated using the gross amount. So ours is a net amount. Okay. Go back. No. Specify structure for tax jurisdiction code. Okay. Over here we have tax jurisdiction for every country that you can maintain. Okay. And this is automated into several parts with whose health tax percentage determined per tax authority. In this field, the length of the part is specified. Length of the nth part of the jurisdiction code. Jurisdiction code can be a code from the law books. Okay. And that can be divided as per like subsection. Okay. That is the jurisdiction code that you can make. Okay. Define tax jurisdiction. Costing sheet. We don't have a costing sheet right now. Message control, switch off tax translation between local and document currency. Tax reporting date. Tax reporting date is 18th in Pakistan. But over here, we have to have a baddie, which is ABAP add-on. Okay. External tax calculation. Define number ranges for external tax returns, intervals. 0, 1. Zero, 1. Physical destination. Again, this is RFC um, RFC callbacks for third-party integration like FBR. Logical destination. Again, this is RFC. RFC connections for third-party integration with FBR. Activate external tax calculation. External tax calculation is coming from point of sale. Okay. And it will be calculated using the schema, integrated using these schema. Okay. RFC destination will be your tax codes. It will be updated. Predetermined RON jurisdiction codes. This is again for American and Canadian addresses. An external tax system is used. System determine tax jurisdiction and checks its validity during the address data maintenance. If this is not set, tax jurisdiction code is empty. The RCC will attempt to determine tax jurisdiction code. Tax jurisdiction field contains a value. Checks this code against the respective address. If tax jurisdiction code is an error message is output. If the flag is set, tax jurisdiction code field is empty. R3 system will attempt to determine tax code. Tax jurisdiction field contains a value. If the check fails, the jurisdiction code for the respective address will be determined. Again, your POS addresses will be integrated over here. Tax interface version. This is the interface version coming from point of sales or any other source. The destination will be SAP. Okay. Fiscal regional codes, Italy, Colombia, and Spain. Let's explore and discover it. Country region 05. Now, every region will have their own tax jurisdictions, and this is provincial tax code. So every province, every region will have provinces, and they will have their own interpretation for tax jurisdictions. Okay. Define regional codes for other countries. Okay. Place of manufacture and fiscal code. PK. We have now what are the fiscal codes for Balochistan, Islamabad, Sindh? These are given over here, and place of manufacture will be mentioned over here. Fiscal codes are necessary, like 2023 tax laws will be different from 2022, so we will change that. Okay. Plants abroad. If you have plants, let's check this. Let's explore this. Okay. Scales. New entries. Okay. New entries. Plants are active abroad. Document type display authorization, alternative local currency active, business area display authorization. Okay, client specific FI settings. Okay. VAT registration number for plants, because plants actually create material that is produced in another country that will be operating in another tax jurisdiction. So it will be levied with a tax code issued by like bodies like FPR. Okay. And this will be like NTN number. This will be given over here. I'm telling you all this because you should know how the tax is actually structured. Now, basic setting is done. Let's go to calculation. Tax codes for sales and purchases. Now, calculation procedure will be different for every country. Ours is PK as selection. Okay, tax code. You want a tax code? Let's say, now how will you design tax code? It will be filer 3, for example, or FX or FJ, FK. Enter. Now, what is this? Filer 10% or FS. Filer services 16%. I'll go back again. FP or FM. Okay. Filer manufacturing 8%. Text type input tax. Check ID. Now, what is check ID? Indicator which determines that any message should be issued if tax amount is not correct. The indicator is not set. A warning message appears in the place of error message. Okay. So we will not use this. Continue. Since this is input tax used on vendors when we are purchasing, so this will be 8%. Save. And this was saved. Enter. Keeping it over here. Tax accounts. Chart of accounts are 8842. And we have not yet assigned a GL account. FTXP is the code. Procedure is PK tax that we discussed in the first part. And this is input tax. Okay. Next step. Assign company code. Okay. 8842. Tax determination, document date. F1, what it says, tax percentage are dependent on date in the case of taxation for jurisdiction codes and time dependent tax calculation. We are time dependent tax jurisdiction. Posting is generally used for determination. 18th is the date for filing it. If you want to determine tax percentage by using a document date, then you can set this here. Okay. Save. 8842. Okay. Base amount, we don't need this base amount because base amount is tax base is net. Okay. Tax base will be ours is net. F1. Cost base amount for calculation of sales tax will be reduced by the discount share. So ours is tax based on net amount. Okay. Gross tax base, gross discount base. So they have actually given the calculation. Save. Save. Enter. Foreign currency, we'll be discussing this later. Determine exchange rate for tax exempt sales, tax code for tax exempt sales. Define reasons and reasons to tax codes. Let's see what are the reasons. Exempt, exempted, reason, tax except law. Okay. Let's go to the next step. Posting, define tax accounts. Okay. Now transaction will be BST. BST 40, 50. 40 is debit, credit is 50. Which one? Input tax. Rules, tax code, and country for chart of accounts. New entries, chart of accounts is 8842. We need a tax account for the country. AA42 accounts. Now New entries. Tax code is FM. Country PK. GL account. Let's pull out a GL account. FS00. Okay, 8842 tax. We have a tax account and we'll use this 80300. 80300. And we have integrated the GL accounts. Okay, now let's go back to FTXP just to see country PK, FM, tax accounts, 8842, 80300. Now you can change it over here as well. Okay, this is how you integrate. Okay, simple.